The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, welcome to this webinar on crowdsourced funding. We're just waiting for a few more people to register, so we'll be starting very shortly. If you have any questions during the webinar, can you please type your question into your computer, and I will answer the questions during the webinar. Okay, we'll get started. Good afternoon, everyone. My name's Peter Towers. I'm the Managing Director of ESS BIZTOOls and ESS BizGrants. Welcome to this, I think, very important webinar on crowdsourced funding and looking at the opportunities that it presents not only to your clients, but also to accountancy businesses and business advisory businesses. Now, the big news, we're in the countdown now to this whole new era. Parliament passed the amendments to the Corporations Code, which incorporates crowdsourced funding on the 12th of September. Sir Peter Cosgrove signed off on the 21st of September to give the royal assent. The legislation provided that the amendments become operational 28 days after royal assent. You might recall that when this legislation was originally tabled in the House of Representatives and in the Senate, the proposal was there would be a 6 months phasing in period. That got reduced in the Senate. It's 28 days. And that means D-Day, as I see it's the 19th of October, or maybe it's the Monday, the 22nd of October. But it's 3 weeks away, and I'm pleased that you've joined us today for this introduction to the types of services that I think will be available for accountants all around Australia. So I'm inviting you to make a commitment to crowdsource funding. I've had a long involvement in this space. I had a contract from Oz Industry for 11 years as part of our consultancy business, accountancy specialised business, to be a business advisor, one of only 11 in Australia for the COMET scheme, Commercialising Emerging Technology. So I saw it firsthand, the problems that smaller businesses have in trying to raise capital. And at long last, 14 years since I got involved in that program, we have some legislation that I think will make life a lot easier. But the big news now, of course, is crowdsourced funding equity raising, which was become operational in September 2017, but that required a private company to convert to an unlisted public company. That's all now finishing. In fact, it finishes on the 19th of October. There's no more conversion from a private company to an unlisted public company. Private companies can now directly go to the market as long as they meet the legal requirements, and of course as long as they've got a compelling story to be able to tell people. Now, the big news for accountants and business advisors, no one's got an historical advantage in this marketplace. It hasn't been going long enough. And there's no need to convert to an unlisted public company. I've already told you that. So now is your opportunity. I'm quite certain that it is. I wish I was a few years younger and still running an accountancy firm. I would be looking to grasp this opportunity with both hands. It's a great service diversification because there's a lot more involved in this than just helping someone with some advice and mentoring on getting them ready for crowdsourced funding, as I hope I'm going to convince you today. Incidentally, we are recording the webinar and we will be sending you a link to the webinar recording, and we will also email to you a copy of the PowerPoint slides. So who's the target in this? Well, it's obviously small, medium enterprises. They need to be companies, but currently they might not be a company. They can incorporate a company tomorrow if they wish. And the other big group, I think, is going to be inventors. Why inventors? Some of you might be saying, well, isn't there another way that inventors can raise capital? There is. It's called ESSIC, Early Stage Innovation Company. But that's restricted to companies that have expenditure of less than $1 million in the previous 12 months and income of less than $200,000 in the previous 12 months. So it's a very narrowly defined group of companies. They also have to be under 3 years old, although up to 6 years old can be admitted under some circumstances. So I think your prime groups are going to be small, medium enterprises and inventors. Now, who are these people the traditional clients of? Small to medium-sized accountants. They don't go to the big four. They don't go to the top 20. They don't go to major consultancy firms, or most of them don't, unless they've possibly undertaken a significant amount of research and development, and they may have had an association with a major consultancy firm. But in the main, these people are clients of small to medium-sized accountants. And looking at the list of who's attending this webinar today, most of these potential clients will be typical clients of your firms, your natural clients. Don't encourage them to go elsewhere. Businesses have got a fair idea of what this legislation's all about and what their opportunities now are. You go back through the various surveys that MYOB, CCH, Smith Inc. have conducted over the last 15 years. The ability to be able to raise capital or to borrow money easier was one of the key concerns of businesses. Well, the government's now answered that for them. They've given them the opportunity to be able to raise capital direct. And in a far better position than what was happening 15 years ago, there's now a lot of money involved in self-managed superannuation funds. And people who are involved in the coordinating of potential investors for this market have told me that there's a lot of super funds are interested in allocating a proportion of their investment funds into investing in crowdsourced funding. So don't encourage your clients to go elsewhere because you might not see them again. If you let them go off to get advice on crowdsourced funding, I think you'll then have trouble in retaining them as a taxation client. But you're going to have to offer them a great service, and you're going to have to come across very positive that you understand this, you've got the systems in place, you've trained your team, and you're aware of what's happening in the broader marketplace. And I hope that this webinar today and some of our other material will help you be very confident. Now, I think it's a new income stream for accountants. Remember the report that Deloitte produced 5 years ago, which looked at digital disruption and was a bit doomsday, wasn't it? And we all thought, oh, geez, the end is coming. Well, there's definitely changes have occurred and are still coming. But one of Deloitte's recommendations in a subsequent report was that accountants should look at creating new income streams. Well, surely this is what they meant when they said a new income stream, potentially helping companies become crowdsourced funding. So where do you start? I've had people ringing me already and saying, oh, where are we going to find these people? Well, have a look at your own clients. That's where you start. So let's have a look. Let's look at so there's some legal tests to be met, and there's some subjective comments and tests, knowing what your clients have been talking about, knowing their vision, I think is going to be very important in this process. So let's look at the legal tests. The group turnover sales has to be under 25 million for the last 12 months. Now that's obviously group, so it's all entities. And the group asset value has to be under $25 million. Incidentally, I haven't found anywhere in the legislation, and I've been combing it for the last week or so as we are updating all of our material because we already had a product package on crowdsourced funding within ESS BizTools, and we're now updating it all to suit the new requirements. I can't find anywhere where an actual definition is given of how you value your assets. I assume it's going to be market value, but I haven't been able to find that. And the company cannot be listed on a stock exchange anywhere in the world, because what the government's saying is if they are listed on the stock exchange as a group, then they've got every opportunity that's available to be able to raise capital. They just go to the market to raise it. Let's look at some of the subjective comments. First of all, a crowdsourced funding company can operate in any type of industry. And I just remembered I better have a look at my questions. I haven't got any questions, but if you have any questions, can you please send them through? And I'll answer them as I'm going. Can operate in any type of industry. It's not restricted like some other government initiatives are. And the big win, I think, is there's no age specification. Think back to the early stage innovation companies. Primarily, it's targeted at companies under 3 years of age. In some instances, it can go up to 6 years of age. So this company could be a brand new, it's incorporated tomorrow because someone in a partnership's been doing some interesting work, and now they think that they would like to have an attempt at being able to get themselves investment ready so that they can raise capital utilizing crowdsourced funding. Or they could be a 91-year-old company and everything in between. And let's look now at some business review. This is the real subjective test. This is where you and your team need to be very much aware of what's going on with your clients. I'm sure you've all got one or two, or maybe a dozen if you're lucky, early stage, high growth and disruptive companies. Companies that want to recreate world history. Companies that have developed some new products or processes or management methodologies, who are aiming for the stars. Now, you mightn't have them for their whole career, but it'd be nice to start with them, wouldn't it? And work with them as long as you can. They may get too big for you at some stage in the future, but I'd be starting off with them if I could, if I was you. Companies who are interested in business expansion, in your annual discussion. Which clients have been saying to you, oh, they know of another business in an adjoining suburb or an interstate or wherever, and they would like to expand into those areas, but they haven't got any money. Also, same type of thing. They're talking about acquiring a business. One of their competitors' business is up for sale because someone wants to retire or perhaps passed on. And do they have a vision for the business, though? This is going to require people who are prepared to move from the relative shelter of being a proprietary company into getting into a quasi-public company situation. They're going to have a vision. They're going to have to be articulate to talk about what their vision is and to be able to lead people. So that's the business review. If you're thinking of any clients as we're going through this, please write them down. I'm going to suggest that you might get together with them in a week or so's time. And do they require funding for this vision to occur? If they've already got a couple of $1 million sitting in the bank account, well, they should be implementing the vision today. But most of these people probably haven't got that money, but they might have a very good vision. Another area I think that crowdsourced funding is going to come into play is on succession planning. Because I'm sure we've all had clients, I've had a few, who over the years have kept on putting virtually every dollar back into the business. They didn't worry about superannuation. And for someone that's now in retirement age, superannuation has only really been around for 15 to 20 years. And a lot of them just didn't put any money aside. They kept on telling me, as their accountant over the years, well, our business is the superannuation fund. Now, unfortunately, there's thousands of businesses now for sale around Australia, and that mightn't be quite right anymore. So perhaps one way of enabling a retirement to occur within a family business where the owner, the founder, would like the business to be passed on to his children or grandchildren, may well be that they are interested in looking to get some capital introduced into the business, whereby they might be able to organise the cash for a succession plan to be implemented. Worth thinking about. So why don't you jot down in your notes who might be thinking of retiring? Have they got the cash for succession organised? Or would they be interested in at least having a discussion on the benefits of bringing someone else in as a group of shareholders, especially crowdsourced funding, because there's not going to be, normally there won't be anyhow, a big dominant shareholder in that group, especially if you've attracted retail investors as the investing group. And the next one I want to look at is balance sheet review. Does the business have loans other than bank loans on first mortgage on the company's own property? In other words, have they borrowed money on the mother-in-law's house or their best mate's spare block of land somewhere? And, they originally told them they needed the money for 2 years and it's now 7 years. These things can roll on a bit. And the mother-in-law is starting to make noises that she wants to move to another area to basically retire, and she needs to buy a new apartment, and she'd really like her money back. Well, one way of affecting that may well be to look at crowdsourced funding to raise some capital. Or it might be that the company's got loans from other family or friends or high credit card debts that they'd like to pay off. So would the directors be interested in raising some capital, allocating some shares to pay off these loans or credit cards and save interest? I think it's worth having the discussion. So I'm really suggesting that you start analysing your clients. Turnover under 25 million, assets under 25 million. Who's talked about wanting to expand or hire? Who's really got that vision in their stomach? Who's got external debts? Who's got a succession type problem? Now, I think if you objectively sit down and start looking at that, you might be a bit surprised how many client names you put on your list. So let's look at the capital raising. Let's get into the positive side of all this now. I hope I've established some sort of thinking around who might be the potential market for crowdsourced funding within your clients. And don't forget your prospects. Because if your competitors are a wee bit asleep and not taking much notice of all this, start some promotions, and we'll talk about that a little bit later. So you can see who else in your area might be interested in talking to you on crowdsourced funding. Now, a company can raise up to $5 million every 12 months, subject, of course, to the market being supportive. So would those companies we've been referring to, what could be 20, 30 or 50 of them, would they be interested? I think some of them would be. So my suggestion will be that you identify who these people are, and in the next 2 weeks, definitely before the 19th of October, D-Day, that you invite them to a private seminar, bring them in together, talk about it. And in the material we supply, we include a full suggested seminar, the PowerPoint slides, the presentations, the handouts. You can edit it, of course, and if you wish, you can write your own. But we supply that as part of our packages to our subscribers. So we've got a checklist for identifying the clients that might be interested in crowdsourced funding. And it's on the screen there at present. This is just one of our documents. We call our documents BAS. It's not the other BAS. It means Business Advisory Services. And this is the updated list. It didn't start with a company, a proprietary limited company, until a few days ago, but obviously now this is the new law. So it's a chart that you can utilize to work your way through with a particular client. So you might give this to your younger accountants to sit down and start working through some client files and identifying these issues so that when partners or managers are going to make contact, you've got a fair idea of the situation of the clients that you'd be talking to. So what's in the new income stream? Well, the key document is a crowdsourced funding offer document. That is virtually a prospectus. So there's a fair bit of work in preparing that. And this will probably require this sort of documentation to be prepared as part of that process. A business plan, a budget, and a cash flow forecast. A company valuation. What is this company worth? A share price determination and an information memorandum. I believe the professional fees for this segment of work would be between $20,000 and $40,000, depending on your charge out rates. But then there's another very important potential source of income for firms who are proactive in this space, and that is a virtual CFO service. Because many of these companies will not be raising $5 million. In fact, most of them won't. I think the average is probably more likely to be around $400,000 to $500,000. They can go back next year or later this year in the first 12 months if they have got a good argument as to why the market should give them some more money, more investment. But they need a strong accounting service. They have to have 2 directors, and many of them will have more than 2 directors, and hopefully they're going to be inviting some experienced directors onto their board. And experienced directors require regular, prompt, accurate financial accounts, don't they? I know, because I was a CFO and company secretary of a listed public company some years ago. And the external directors asked a lot of questions, and quite rightly, that's their job. So you might be able to secure some chief financial officer service appointments out of this whole process. So that's your new income streams. But part of the role is also to advise on who the crowdsourced funding intermediary is and what their role is. And I'm going to talk more about the intermediaries shortly. And most of your clients, in fact, I would nearly say every one of your clients will need some assistance in appointing a CSF intermediary. Who should be appointed? What are their terms? Now, the big change that's occurred is that proprietary companies can now be a crowdsourced funding company. Proprietary companies have a limit of 50 shareholders. That's always been the case, as long as I've been taking any notice of company law. Employee shareholders, though, are not included in the count of the 50 shareholders. And crowdsourced funding shareholders are not included in the count. When this legislation first went to the House of Representatives, the Treasurer was proposing that the upper limit for both normal proprietary company shareholders and crowdsourced funding shareholders would be 50. Well, that never got very far because, quite rightly, both sides of politics had a bit to say about that and said that's not practical. So we now have this concept, and I've got a chart here, that we will have the ordinary shareholders, which are counted, that's up to 50 of the ordinary shareholders of a company. And then we've got employee shareholders that can be any number, but they're not counted in that 50. And the crowdsourced funding shareholders can be any number, but are not counted in that 50 shareholders. Takes a bit of getting used to, but that's how it's going to run. So when you look at things like share registers and that sort of matter, the crowdsourced funding shareholders have to be treated separately. Incidentally, a business that I think is going to grow out of all this is going to be share registry businesses, because there's going to be a lot of these companies suddenly end up with 500, 1,000, probably more in some cases, shareholders. The government has not changed the legislation, though, that enables a private company to raise capital under Section 708 of the Corporations Act. They can still do that. And in fact, they can do it in conjunction with a crowdsourced funding raise, if they wish. Now, crowdsourced funding offer, the offer document, can only be made available to the public via the platform of the crowdsourced funding intermediary. Obviously, that's their website. So that is the only way that anyone can become a shareholder in one of these companies. Crowdsourced funding intermediary must hold an Australian financial services licence, and they have got an endorsement on that licence that they can offer a crowdsourced funding service. So the crowdsourced funding offer document has to be prepared, and it then can only be placed on one crowdsourced funding intermediary's website. Now, there are 7 crowdsourced funding intermediaries, and we're going to talk a bit more about them in a moment. But your clients need to select only one of them and then negotiate a deal with them. And why I say negotiate a deal, because the legislation doesn't specify how the intermediary gets rewarded. It's up to the intermediary to discuss that with the company. Now, I notice some of the intermediaries are listing on their websites their fees. They seem to be around 8% of the capital raised, but they could take shares in the company, they could take all cash, or they could take a bit of both, or they can take any other strategy that they suggest that the company directors are prepared to accept. So all of the applications must go through the intermediary, even if it's your client's favourite aunt and she wants to invest $500 into her nephew's company. It's still got to go through the crowdsourced funding intermediary's website, because it is very important that every investor has been personally given the investment warning, and they have to sign the investment warning, and the intermediary has to retain that. Presumably ASIC are doing some spot checks on that to make sure that part of the system works, because the government has been quite paranoid in all this, that retail investors receive appropriate warnings on the risks of investing. Don't forget, if you have any questions, can you please type your question into your computer, and in webinar jargon, raise your hand and I will look at them and answer them. Now, the maximum period that the offer can remain on the website is for 3 months. You could have a shorter period if that's what your client wants to do, but I would always recommend taking the long time. 3 months, if you fill the minimum or maximum amount within the 3 months, that's all right. The intermediary will then call time on that capital raising. But I would be giving any client I'm working with the opportunity to go the maximum period. Now, the main features of the legislation are that a retail investor, which is anyone who is not a sophisticated investor, can only make a maximum investment of $10,000 per company every 12 months. And there is a cooling off period for every retail investor of 5 business days after making an application. The company is not required to appoint an auditor. There's been a bit of toing and froing going on about this. When the legislation first went to the House of Representatives, it said that you had to appoint an auditor if you raised over $1 million from all crowdsourced funding offers. Somewhere along in the parliamentary process, that's been changed to $3 million. So $3 million from all crowdsourced funding raising or other similar capital raising, which brings into play the Section 708 capital raisings from retail investors. Doesn't include sophisticated investors. So if the company's raised more than $3 million from them, an auditor has to be appointed. Bit more about the intermediaries. They hold a financial services license. They've got gatekeeper obligations. When the then Treasurer, now Prime Minister, introduced this legislation, he emphasised that the intermediary's role was to act as a gatekeeper, to be ASIC's representative, deputy sheriff, whatever you want to call it. So they have a very strict legal obligation to make sure that the crowdsourced funding offer document reflects everything that the legislation states has to be included. There's a lot of information required about directors and senior managers of the company. There has to be a communications channel for the whole period of the offer being on the intermediary's website. That means that the directors need to be available every day for the period of time, say 3 months, so that the intermediary can organise responses to questions that potential investors have raised, or to organise a group of potential investors who just want to have a discussion with the directors. So the legislation proposes that to occur, and the intermediary is responsible for organising that. The intermediary has to disclose on their website for every individual company what their fee arrangements are. Are they being paid a percentage, 8% of the capital raised? Are they being rewarded 4% in a cash payment and the balance in an allocation of X number of shares? Whatever it is, it has to be disclosed on the website where this particular offer is shown. So who are the potential investors in crowdsourced funding? Because I know most accountants, you also should be thinking or already are thinking, well, who of our clients might be interested in investing in these types of companies? Well, I think there's 4 specific segments, and this is from one of the intermediaries' websites. They're saying that sophisticated investors, obviously the people with net worth of 2.5 million or earnings over 250,000 per annum, they're a group of potential investors. And then you've got what they call proactive enablers, people 45 to 65, net assets of $1 million plus could be interested in investing. Progressive enablers, younger people 35 to 55, assets up to $1 million. And these assets are excluding their home and superannuation. And then you've got younger people who are just starting off investing some spare money. So they're the potential investors. Part of the potential investors, though, also is superannuation funds. And I think you will find that most of the intermediaries do have associations with other companies in their group that have access to thousands of potential investors, because some of them mention the numbers on their websites. So what are the opportunities for accountants? And I hope you're feeling a bit excited about all this. I haven't done my job if you haven't got that excitement feeling. I think you can offer a high value service for your clients, for your current clients, and for prospects. It's a new revenue line that will be a high margin line. It's strategic work. It's interesting work. It will challenge your accounting team. to get involved in some of this work. And as one young lady said to me a couple of years ago when she got involved in some of this sort of work, I now believe I'm doing real accounting work. You'll get value add for clients and it will increase loyalty. Your clients will respect that you're able to stay with them, to help them on this next step up the ladder that they're going to be undertaking. They're not huge corporations. They've got to be under $25 million in turnover. The market treats them as medium enterprise companies, the very bottom end. Medium enterprises go up to about $100 million turnover. So let's look at some of the indicative fees, because I did have a phone call recently, someone saying to me, well, what are the potential fees out of all this? Excuse me. They're on the screen. They're indicative. There's a range of work to be undertaken. Clients are going to need advice on how this whole system operates. Most of them will need a business plan. Most of them will need budgets and cash flow forecasts prepared. I think many of them will need some mentoring and guidance on their current directors on corporate governance, because the last thing most people would want to do is be involved in an ongoing board of directors that a couple of new directors have been appointed to by the new investors, and they find that they're out of their depth. They don't really understand. So maybe they need some brushing up. The preparation of the offer document, which is the de facto prospectus. And then if you are involved in offering a virtual CFO service, now that could be a figure of about 10,000. I've got a client in one of the major cities receiving $125,000 for offering a virtual CFO service. And I know some people are getting more than that. They tell me around Australia. So that might give you an idea of what the potential windfall. None of that will come your way if you just continue with the client and produce an income tax return. And my big worry would be that if you have a client go off to someone else that starts supplying this range of services, they will convince your clients within a year or so to switch the taxation return work to them as well. A couple of years ago, I had some discussions with Enable Funding, which originally were called ASOB, Australian Small Scale Offer Board. As ASOB, they were the first platform that was looking at crowdfunding in Australia. They basically were raising capital for investment under Section 708 of the Corporations Act. That company has raised $148 million for 176 companies over that period of time. It's pretty hard to raise money under Section 708, so they've done fairly well, I would have thought. They have got 30,000 odd exclusive members. These are potential investors, according to their website. Now, all this information from now on is extracted from Enable Funding's website. They believe that the capital raised in Australia in 2016 was about 119 million. Most of that would have been Section 708 raisings or the first part of early stage innovation company capital raisings. But this is their forecast, and this is where I get excited. They're forecasting that in 2017, there would have been 210 million. This year, 420 million. These figures might be a year or so out a bit because it's taken a bit longer to get all this legislation through Parliament. But then they forecast, and these are very experienced people in this industry, they see the figure going to 688 million to another 1,023, or that's billion, and then to 1.5 billion by 2021. You've got to remember that Australia's playing catch up with crowdsourced funding. New Zealand's had this for 5 or 6 years. UK's had it for 6 years. USA for 6 or 7 years. Canada for about the same period of time. And there's been a phenomenal uptake in each of those countries. There's some big figures there. The real question is, do you want to be involved in some of that? So that's a tenfold increase in just 5 years. Why not create a new income stream out of this market? At the same time, offer a fantastic service to your clients to help them to go to the next level. So in summary, I think crowdsource funding is a great opportunity for some of your clients who want to go to the next level. And I know, before anyone starts sending me email or ringing me, it's not for every one of your clients, and not every one of your clients is going to be interested. Some people are paranoid about owning 100% of their businesses. Well, that's great as long as 100% represents real value. But 100%, when it works out at virtually being nothing because of loans and debts, I think looks a lot more attractive when it becomes 60% of something that's got net worth, because it is part of capital generation. So we've developed a special package that will guide you through crowdsource funding. So it includes articles and forms, promotional materials so you can present those webinars and seminars that I talked about, checklists for determining company eligibility. I've skipped through it obviously in a webinar. It's a bit more detailed in some respects than what I've probably told you as such. The CSF offer document, how you deal with intermediaries and processors, and the post crowdsource funding capital raise. You might want to raise some more money later on with the clients. So we've got some guidelines on that. Within ESS BizTools, there is a complete product package of everything that you will need for crowdsource funding. You can subscribe to that as a standalone product for $999, including GST. Or you can subscribe to the silver package, which we've got a special 25% discount on, which we were going to finish on Friday, but we've extended it till next week because of the imminent launch of crowdsource funding. Now that special is there's a 25% discount. That package includes the crowdsource funding package for $1,623, including GST. Or you could subscribe to our overall gold product package, which includes every product package that we produce, obviously including crowdsource funding, and our ESS BizGrants package, and some other material, including 4 separate mentoring sessions that's available to you to use with us to make sure you do fully implement. And that's for $2,970, including GST. Now, I haven't got any questions yet, so I don't know whether that means I've answered all your questions, or you're going to send me emails later on. You're most welcome to do that. So if you want to do that, there's my telephone numbers. Or you can send me an email, peter@essbiztools.com.au. If you want to check out our website, please go to it. It's a brand new website, www.essbiztools.com.au, which is the website for accountants and business advisors. Part of our gold package is a subscription to our BizGrants Finder, which is www.essbizgrants.com.au, but you can subscribe to that package separately on its own if you wish. So that's about all I've got for you today. We're going to send you a link to the recording of this webinar, and we will send you a copy of the PowerPoint slides. And if you have any other questions, please don't hesitate to contact me. Please visit our websites and have a good look at what's available. You will not see anything yet on crowdsource funding because we haven't uploaded the new material. It will be uploaded on Tuesday of next week. So thank you very much for participating in this webinar today. Have a wonderful day. Goodbye.